Oh wow, the talk of those tariffs really brought the market down. The overall market fell hard, and our Misti play went down as well. Stick around, we're going to look at Misti, and then we're also going to see how far it went down and what do we need for it to turn around. Hello my friends, this is Legend. So Misti had a drop today and the market itself just tanked hard. So let's just take a quick look, and if we look at SPY here, now I've got a few extra lines here, so just ignore all those. But you can see yesterday we were at a close of 564.52, and when it opened today, wow, I mean it just dropped, didn't it? It opened at 545.11. Ouch. So looks like there was talk of tariffs and the market did not care anything about that. And of course it fell. It fell overnight, and we can look at that on the 5-minute chart right here. And I can zoom out a little bit so we can see what it looked like overnight yesterday. And this is last night. And you can just see it's just, wow, what a drop, right? What a drop. I mean, you couldn't have done anything about this one, right? It came out and there it was. It hit a high of that 570.79 and then just fell, right? Oh, wow. And it looks like it got as low right here to about 542.15. And that's just in a matter of about 4 hours. So crazy overnight movement. Then it opened today and it fell a little bit more, right? Looks like we were starting to go up on the SPY here. We went up a bit and then started coming down, went up, and then we started going on back down. And as you can see, we ended up closing at 536.70. So that's just an overview of the overall market there. And if we look at Misti here, we can see that Misti yesterday closed at $21.88. Then it opened today at $20.35. And now we're sitting at $20.02. We did have a little pop-up early the morning, but then it just started falling, right along with the market. And it went as low as $19.60 before coming back up a little bit and then just settling out at that roughly $20 per share price. So what a rough time there. So as you can see here, we had an 8.5% drop in the market on Misti. And that's Misti alone. It dropped 8.5%. The SPY dropped 4.93 in a day. Ouch. Whoa. That's almost a 5% drop on the SPY. So, yeah, of course Misti dropped, right? I mean, it dropped a little bit more, but it did end up dropping about 8.5%. So, here's a question for you. So, if the price dropped and it had closed the day before, and it closed at $21.88. So if the price closed at $21.88 the day before and it closed at $20.02 today, so if the price dropped 8.5%, will I break even if it just goes up tomorrow 8.5%? So let's take a look at my sheet. All right, so here we are on my little spreadsheet here, and I just kind of threw this together. So we'll just use Misti as the example here. And we know that Misti yesterday closed at $21.88. Okay? And we know that because that's what we just looked at. Now, if that price is $21.88 yesterday's close, and we know it dropped minus 8.5%. Okay? That was yesterday's price, and this is the drop today, right? So therefore our new price with that price share from yesterday is going to be $21.88 from yesterday, a minus of 8.5%. So we lost $1.86. Therefore, the new share price is $20.02. So just to confirm that all matches up, there we go. $1.86 and 20.02. So everything is matching up. So our math there is correct. Now, if we were to just earn our 8.5% back, would we be at a break-even point? Well, let's just look and see. So our new price now is $20.02. So that's here. We go up 8.5%. We have a gain of that new gain would be $1.70. So we would only get back $21.72 instead of the $21.88. So as you can see, anytime you have a drop in the price, you need a bit more of a percent increase to get back to break even. Now for a lot of you, that was probably already pretty clear, but for the others out there, sometimes when you first think of it, you think, well, if I lose 5% today and I gain 5% tomorrow, then I should be break even. And I'm just showing you that you actually will not. You need a bit more. So what is that a bit more that you would need to get that end price to be at the original $21.88? So that new percent, what you would actually have to gain would be 9.29%, because your existing price right now being $20.02, and you'd need it to go back to $21.88. So you'll need 9.29% increase versus the 8.5% that you had lost up here. So if you have a stock that drops 50%, then you're going to need to go up more than 50%. You're actually going to need to go up quite a bit more if you're at a 50% loss. So let's just punch that in and I'll show you. So if you lost 50% of your price there, that $21 would come down to $10.94, and you would actually need 100% gain to get back up to your just original price. So we'll take this back to our minus 8.5 that we had before, and we'll just do the summary right here. So the price of $21.88 with a percentage down of 8.5% means you'll actually need that price to go up 9.29% to break even. And that's on the price alone, right? That doesn't take into consideration with any kind of distributions that we get with Misti. So by adding in the distributions, we kind of get a little bit of an edge there. But I will say, with Misti, we're playing this a bit different, right? We're not actually looking for price appreciation for Misti. If you're looking for price appreciation, you may want to look into investing into Mr. between the two, if you're just picking between the two. Not saying that you should invest into Mr. to get price appreciation. I'm just saying between Misti and Mr. Mr. is probably going to give you a better price appreciation than Misti. But Misti is going to pay you distributions each month, whereas Mr., the only way you're going to make money on Mr. is to sell. So with Misti, I can just hold on to it, earn those distributions, and eventually I would make enough in distributions to cover my cost that I have actually invested into Misti, and then everything outside of that would be pure profit. But to do the same thing on Mr., I would have to buy it low and then wait for the market to go up and sell it high, and then wait for it to drop and buy it low again. So if we look at Mr. here, an example of what I'm trying to say here is you need to buy it here, down here, and then sell it up here. And then you would need to wait for that to drop to buy it again, and then sell it again. But here's the question, or here's the problem. You don't know where that bottom is. Is this the bottom here for Mr.? Is this the bottom? Or is it way down here? So trying to time the market and trying to guess where that price and bottom price is, it's impossible. And to know if it's ever going to go back up or how high does it go? You never know. So trying to buy low, sell high sounds easy. And if you're looking at a chart at the history of it, well, that's easy, right? Buy it here, sell it up here. Buy it here, sell it up here. Buy it here, sell it up here. But going forward, do I buy it here or not? Well, you don't know because you don't know where it's headed now. So for Mr., if you just buy and hold, then yes, you can make on the price appreciation if it does continue to go up. But what if it goes down? You don't make it on the price appreciation. But if it does, then you do. But once you sell it, you're out of it. There is no replenishing. The only way to replenish is to wait for it to go back down, buy it again, wait for it to go up, and sell it. So why is that different than Misti? Well, for Misti, and now we're looking at Misti here, I don't have to buy it here and sell it up here. Buy it here, sell it up here. Buy it here, sell it up here, right? I don't have to do that. I buy it here, say, and then I get these distributions. Boom, 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 right? And I ain't done nothing but just hold it. So I don't have to start selling off my shares to make money. With Misti, I can just buy it, earn the distribution, and it pays me like an income, just like a paycheck, right? I'm not whittling away at my shares, whereas Mr., you have to sell them. So once you've sold them, then you don't have them anymore. So you don't make any money off of it anymore until you buy it again and wait for it to go up again. For as Misti, I'm buying it, I hold it, and they pay me for holding. So those distributions are my income then. So it's a completely different mindset with Misti. With Misti, I'm not looking for price appreciation. Yes, I know the price goes down or goes flat. I want it to stay flat or go up. And if it does go down, that's fine as long as it doesn't go down tremendously. I don't mind it staying flat. If it stays flat to up, that's the best for me. And then still pay the distributions. Then eventually I will get all my capital back. And then after that point, it's all profit. And if I want to buy more Misti with it after I've gained all of my capital, my original capital back, then in a sense, YieldMax is buying more shares for me. I'm not using my money to buy more shares. YieldMax is. So yes, that is more of a long game and it will take longer to do it this way. But in my mind, that's the safest way to do it. Get my capital back and then have the distributions, and I can use them if I choose to buy other stocks. I can use it to buy more Misti, whatever I wanted to do, because those distributions are now free and clear, because all of the distributions before were just giving me my capital back. Now that's different from just them paying me back the distributions from my capital, right? Sure, some of it does probably come from it, right? But I don't necessarily say that it's being paid from my capital or paying out of my capital. So you're just getting your capital paid back to you in the form of a distribution. Well, in that case, this would eventually just go to zero, right? But it hasn't. So I'm kind of really looking for this one to kind of hold out around this 20. I think it's probably going to dip back down a bit because of the tariffs. Has the market quite scared, but who knows? They might move into Bitcoin. Who knows? And if that's the case, then maybe Misti might be the ETF to be in for sure. So I think I'm going to wrap it up right there. I appreciate everybody sticking around and listening to my video. And if you don't mind, hit the subscribe button and click the like for the video. Be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, legend out.